Yeah, I can hear you now. Welcome, everybody, to the Chinchilla Pickin' Podcast. It is May the 26th, 2024, and it's 4:11 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only Baron of Bonds, Brandon Beaver himself. Brandon, how are you?
I'm just waiting for your camera to unfreeze. Just so you know, you're frozen, so I can't see anything you're saying. We're going to have to go off audio cues here. But I'm doing all right, man. The Mavericks just won Game 2 of the Western Conference Finals. 2 more games away from the NBA Finals. Excited about that. Waiting on these storms to come around and see what happens with that. Really getting tired of this, man. It's like a tornado every week.
It's springtime. I went to high school in Omaha, Nebraska, and it was the same thing there. And it's pretty typical of Midwest to have tornadoes in spring and even in all the way through August. It's just the heat, the change in temperature. I'm used to it, man. It's nothing unusual.
It's a little extra for Southwest Ohio so far this season. A little extra. You know, we used to have, you remember back in the 90s, we had that El Nino thing that happened. And for a long time in my childhood, every spring was pretty extreme. But this is the first time that we've had to actually take shelter in our house.
Wow, really? Because I've had to do it, and we don't live that far apart a number of times.
We've been here 7 years. I've only had to do it this one time, and it was like 2 weeks ago when we had those tornadoes roll through. We had one in Middletown. Things got pretty freaky over here in Trenton as well. And there was a tornado that touched down right down the street from my girlfriend's parents' house over in Riley Township by Oxford, Ohio. And, that was – I think we had 11 tornadoes in southwest Ohio and eastern Indiana just a couple of weeks ago on that one night. Been a little bit wild,
right? Well, yeah. I mean, it's this time of year. I'm used to it. Like I said, it don't bother me too much anymore.
Okay, I'm getting sick of it this year.
Gotcha. What I'm getting sick of is how GameStop still manages to make the news every week. Did you see that story that they went ahead and sold 900 million shares, $900 million worth of shares to recapitalize the company?
I mean, it's a good decision for them. It's terrible for shareholders.
Right. Well, the share price went up afterwards because of it.
I know. It's one of those weird things that, like, the only way that GameStop is actually going to make a significant amount of money is when these goofballs pump the share price up and then they're able to sell the shares out on the market to pad their balance sheet a little bit. Right.
And then I continued my watching TikTokers on investing. I found one guy, he had 200,000 followers. And I'm watching him on it, and he's got a chart behind him, and he's circling the chart like most TikTokers. And I'm listening, trying to give him benefit of the doubt. And he's sitting there and he's talking about how, well, if you look back an hour and a half ago, it was down here. And if you would have bought this candle, then you would have seen it jump all the way up here and you could have made all that kind of money coming in. And then that looks similar to where we're at right here. And so it's looking like it's going to bounce up again. I'm like, you have no idea what you're doing.
No.
You have no clue at all what you're doing. You're just spouting off what just happened and saying, look, it might happen again right here because it looks similar. And you have 200,000 followers, and it blows my mind, Brandon. Blows my mind.
You think they're not Nostradamus or something. It's
And don't get me wrong. I look at charts, but it's a small piece of my whole of how I look at things. You know what I mean?
Yeah, it's an interesting way to measure psychology of investors sometimes, and a couple of chart patterns seem to work, but most of it's BS.
Right.
Most of it is, and it's goofball stuff. It's pie in the sky. I mean, these are the snake oil salesmen of 2024. These chartists are. They're the snake oil salesmen. They're the same, kind of people that in the 1800s would, sell you snake oil to cure your leg pain or cancer or whatever.
It just blows my mind, yeah.
Yeah, and nobody holds them accountable. It's whatever. I guess these people are going to exist all the time, but we want to warn our listeners here that kind of stuff exists.
Right.
It's fraudulent.
Yeah.
And honestly, probably half the time the people who are making these videos have no idea that they're frauds.
Right. So before we get into the show, and we had a lot of new listeners last week, so I hope they're listening this weekend. Thank you for joining us. Thank you for listening. I want to throw this out there to any one of these investors, quote unquote, that are on TikTok or Instagram with like 10,000, 20,000, 100,000. Who cares how many followers you have? And you have a chart behind you and you're trying to tell people how to invest off a chart. I'm willing to go out here and tell you, I bet you I can beat you at picking stocks.
Yep, over time, absolutely. Yeah, you might
guarantee I can beat you.
But over time, give us a year, and we'll nail you.
I don't even think a year. We've challenged other very smart individuals before, Brandon.
We did 6 months.
Oh yeah, it was like 3 to 6 months somewhere there, and we beat them. I don't even think we need a year.
You can get super lucky on one stock, blow it out of the water, and it's not skill, and that's why I was iffy about it. But usually over the course of the year, these things level out, and you see who's swimming naked because the tide goes back the other way.
Yeah. Well, anyways, I still put that out there. No matter what, I feel chinchilla picking can rise to the surface, the cream, every time, 10 out of 10 times. All right, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. That way you hear the lie back and forth, the bicker and the banter right here for your educational listening, I would say, maybe. I don't know. Maybe entertaining listening. I know we got a lot of comments last week based off of us arguing about GameStop. I had 2 different people call me immediately after they listened to the show saying, hey, that was hilarious listening to you two argue about GameStop and their listeners. And I was like, well, I mean, we were spouting our truths. Brandon had his truth and I had mine, and we disagreed, and that was all it was. So, but anyways, as always, Brandon, you have first dibs at the topic. Go ahead, man.
All right, so let's talk first about one that we got wrong, and it's not, no hurt, harm, no foul here because we just told people not to buy something. And, we were at like $450 a share on NVIDIA when we said, don't buy this. This is too expensive. Well, over $1,000 a share right now. Earnings just came out. Once again, they've tripled revenue year over year. This is now revenue of $26 billion is what they brought in. Net profit increased more than 7-fold to $14.88 billion. Of course, once again, quarterly records for NVIDIA exceeded analysts' expectations, which were already sky high. The stock just continues to kill it. It's insane.
I mean, they just keep blowing it out of the water, and it's the sales. They can't keep up with demand. We've talked about this before. They can't keep up with demand, so their sales are going to continue at this rate for at least a little bit longer. So,
yeah, it's
another 2 years at least minimum.
The CFO Colette Kress came out. She revealed that large computing companies like Google, Microsoft, and Amazon account for about 45% of the company's data center revenue. That totals over $10 billion for those big companies. The stock price obviously has surged. It's tripled in the past year. The valuation now exceeds more than $2 trillion. Pre-market trading saw the stock rise 6% following the earnings report, reached over $1,000 per share. They announced a 10-for-1 stock split effective June 7th, and probably buying this stock right now ahead of the stock split and trading it's probably not a bad idea.
Right. It's probably it's going to continue to rise. Like I said, for at least a minimum the next 2 years. Maybe not rise. Maybe what's the word I want to put? I mean, it can't continue right. Maybe it can continue rising at this rate. Who knows? I mean, I've said it before, but I think it's going to continue with positive revenue increase for whether that's 1% or 40% or for the next 2 years. I'll put it that way.
I mean, they've essentially got a monopoly on the AI chips right now. The thing that concerns me is that they're taking full advantage of this, and the prices for these AI chips are way too high. And I think that's going to incentivize some competition to come in and do this cheaper. And it's going to incentivize more companies to make their own chips. That's my opinion. Let me give you an example here. They get a new generation of AI chips, codenamed Blackwell, that are going to launch later this year. They're going to price at over $30,000 a chip.
That's a lot of money.
Yeah.
Per chip.
Yeah.
And they just like when we covered their last launch, and I broke it down, they can't just sell it per chip. They got to sell it in a set, and then if you want it installed in one of their setups, it's even more money. And it was like the way I broke it down on their Microsoft deal when they first announced their latest chip, it was like $80,000 per setup or something at that time. Mm-hmm. And then in order to have one server's worth of setups, it was like you were buying 5 or 6 of them. And then Microsoft was buying X amount of servers and ended up being billions of dollars that they were buying off the last release. I guess I'll look into Blackwell and cover the breakdown of this one and see how it's going to be set up.
The current generation chip right now for artificial intelligence from NVIDIA is the H100. And Meta, for example, they're aiming to have around 350,000 H100s by the end of the year, this year. Tesla has also came out and said that they're going to buy a significant amount as well. So,
and that came out over a year ago, and it was been in development before that for a couple of years. So the technology behind it is 4 years old?
It is. But if you look at 4 years ago, so coming out of COVID, you ordered these chips and they would take about a year before they arrived. And now we're looking at weeks. So we still have supply chain constraints, according to the CFO. Those supply chain constraints are likely to persist into next year, but we're down to a lead time of about 3 weeks.
Oh, that's nice. That's good.
Yeah. Not terrible. Not terrible at all.
How fast can Microsoft and Facebook and all these companies do things with the chips? How fast can they take these chips now and actually provide some commercial revenue because they have it? Like that's the question I want to know. Is I know that there is revenue to be made off of AI and off of having these chips. I don't know what it is. It's like when the world went from 3G to 4G on phones. We knew that was a huge step, but nobody could tell you that because of doing that, we're now able to have Uber and Lyft. Nobody was able to tell you that, right? Uber and Lyft came about because of the 4G was able to really make that in real time and see cars showing up on your app and everything, and all that stuff that we're used to now was because of going from 3G to 4G. But we couldn't have imagined that when we were beginning to make that transition, when we bought the 4G units and put them up poles and said, all right, we've invested in 4G, let's turn it on. We didn't imagine all the things that would happen because of it. It's the same thing with these AI chips. We know things are going to happen. We know new technology is going to come about, but do we know what it is?
No, and the thing is I think a lot of these big tech companies are buying up all these AI chips and just throwing things against the wall and seeing what sticks. I'm very concerned about an AI chip bubble. I'm very concerned about it right now. This seems to be a lot of hype. And I'm not saying that this isn't going to change the world, change the way that we do things. I'm just wondering if we're overshooting here a little bit in the beginning.
Because it's 2024, Brandon, and you do not have to do things the right way. You just have to be first.
Yeah, that's kind of always been corporate culture, right? Everybody wants to beat everybody else to whatever it is, OpenAI, I don't think has made any money so far. But where I think the money is going to be, and what I would like to see, is what Palo Alto Networks is going to do with it. The rest of the cybersecurity plays,
CrowdStrike,
that's going to be huge. for cybersecurity. I think it's going to be huge for national defense. I think it's going to be big for the video game sector. I don't know that, having Meta's Llama 3 as a chatbot is going to be a big revenue driver. But for Meta, what will be the revenue driver for them is how they use artificial intelligence and targeted advertising.
You know what I would like to see is if Meta, since Meta is also a gaming company or owns a gaming company, if Meta can actually have NPCs that learn from playing you and they learn how to beat you better.
Well, that already exists in some games right now, but I think it's getting better and better and better and better.
Yeah,
for sure.
Isn't it that one that everybody was on about 3 months ago, posting on social media, and you drop in on some world with 3 other guys or 3 other teammates, and you battle robots and stuff. I think I saw that everywhere.
We were talking like for a long time. It was Fortnite. I don't know if that's
this is after Fortnite. Yeah. Anyways, that was the same thing there. That the computer was meant to learn from the human players and get better.
Yeah. I mean, one of the cool things about Red Dead Redemption, you'd ride your horse past a house that was being built, and then a couple of game days later, you'd come back and it was more built, and then eventually it was finished. That was kind of cool.
Yeah.
But let's move on here real quick, because we just talked about a stock that we missed the boat on, but we're going to talk about something here that we absolutely got right. Go back. One of our episodes that we did a year and a half, maybe 2 years ago, was Target versus Walmart. And Dave, you said at the time, if I was to buy a retail stock, it would only be Walmart.
Right. And Walmart has done good since then.
We talked about the differences. We talked about the amount of sales that Walmart had, the volume that Walmart had versus Target, the discounts, how Walmart would have been the better pick going into inflation because Walmart had the better prices than Target did. Target's margin for a little bit dipped to negative. I told you stay away from Target at the time. They were looking at like a 1.5% net margin, and then it went negative, and now it's back. But listen, they're still losing sales here. They're still losing market share. They missed earnings estimates. They experienced another year-over-year decline in sales. In contrast, Walmart exceeded expectations, had market share gains. They benefited from more higher-income customers coming over to shop from them, people that make over $100,000 a year. We've reported on this before that Walmart experienced a jump last year on that. They had another jump on it again. Target is now introducing a low-cost private label. They're announcing price cuts for approximately 5,000 products. I don't know if this is going to be – a lot of analysts are saying this is a good idea. It might be a little too late. I don't want Target to invent the wheel here. But they do have to do something to get market share back, because right now in this inflationary environment, they are suffering.
Well, yeah, and like you said, they're going to have to cut costs. Well, that was their big difference is, hey, you come to Target, we have these bright lit stores of wide aisles, and our stuff's a little bit more expensive than Walmart, but it's better. Okay, so now if you don't have that stuff, why am I going to Target? Why can't I just go to Walmart?
So here's my thing. When I walk into a Target, which is much smaller than a Walmart usually, I walk into Target, all I see is what's in front of me, like for the next 20 feet, that's it. I walk into a Walmart that is like 3 times the size of a Target, at least here in Southwest Ohio. I can see almost the entire store layout, the way that they do things. Their shelves aren't too super high. Our Target here's got an apparel section that's got a shelf that goes almost all the way up, and you can't see past it. So all the electronics and all of that stuff past the apparel, and even the groceries are completely hidden. Walmart, I walk in, and I can see oftentimes very quickly what's on sale, what the deals are. Target's not that way. I think Target needs to look at their layout, look at their hot spots. My previous retail experience, I put my retail hat on and I'm looking at their hot spots. There's straightforward hot spots, and then there's reverse hot spots that people look at when they're doing those customer flow charts. Sometimes you see those employees stalking you and see what you're touching and what you're looking at and stuff, and they come up with these hotspots. Usually they have the reverse hotspots. That's when people turn around to go back. What's going to be right in front of them. 90-degree hotspots, 45-degree hotspots, all that good stuff. The back wall, all of those things. And I'm not sure that Target really pays attention to that because nothing really catches my attention when I go in there. So, yeah, I mean, I think what Walmart needs to do is they need to look at price reductions, but they need to be strategic with it, and they need to communicate those price reductions to the people that are in the store.
Right, and you meant Target needs to communicate the price reductions.
Yeah, Target needs to do it. But I say Walmart, I mean Target. Yeah.
What's Target's current profit margin?
Off the top of my head, I don't know. I didn't really look at it right at this point in time.
That was a big call out last time we compared the two. That was a big call out last time we compared them, and Walmart's profit margin was bigger than Target's. And so during the argument was during higher inflation, Walmart was going to be able to maintain a profit, whereas Target would not be able to maintain as high as profit because due to profit margin alone.
And gross margins never really been a focus for Walmart. They want to keep it positive, but the reason why it's never been a focus is because they have so much volume. So, what they're selling kind of makes up for the percentage of margin that they're making on each product, which is usually pretty low. But they've been beating Target on net margin and gross margin and gross profit. All three of them have been beating Target for the past 2 years now.
Yeah.
So they relaunched the Target Circle membership program, which I'm not sure why they ever took that away. I mean, the membership programs are always a big boon for the companies who are able to have them. They're looking at attracting shoppers with extra services like same-day delivery. You know what? This is an indirect cost to your margin, but now you're looking at same-day delivery and in-store pickup and stuff. Those are all things that hurt the margin of the companies because you're taking people away that would normally be stocking or selling to customers or cleaning the store, and you're making them grab stuff and take them out to shoppers that are out on the curb or having deliveries. Now maybe they work with Instacart here, I don't know, but even that's going to hurt their margins, so they have to be careful with that as well.
So, yeah, I want to talk about that because a lot of companies are doing this. This is all due to the Amazon effect. So many times on the show, we talk about how the Robinhood has had an effect on the overall retail trading platform companies such as Fidelity and TD Ameritrade, how they've had to have zero fees and higher interest rate because Robinhood forced them to. So Amazon effect on retail is the same thing, next day delivery. That's the Amazon effect. Because Amazon was able to start doing next day delivery, everybody wants next day delivery. And so this is something that companies have to do. Now,
they have to do it. I just think they have to do it.
Well, here's the thing. Like, there's multiple ways to do it. You either raise everything 1% across the board to pay for the new employees and the new processes and the new setup, or like you said, you take them from existing pool of employees, or you automate it. You use robots. That's how Amazon is affording it. Amazon is really investing heavily in robots and robots and robots so that they don't have to pay employees. And I know that's not something Target or Walmart can do effectively right now, but they're getting to that point. Everybody is. So you're most likely. I mean, Target's come out in this earnings report saying they're going to cut costs. You're not going to cut costs if you're going to try to push more next day delivery. You actually got to raise costs.
Yeah, and that's the thing. And now they're going to relaunch the Target Circle membership program. So the question is are they going to charge more for the Target Circle membership program for customers that want that same day delivery or for customers that want to pick up on the curb? I think a lot of these companies, they need to look at what's going on with their bottom line when it comes to at least the in-store pickups, because you're incentivizing customers to not come into your store.
Yeah.
Yeah. So guess what? All of those, those last minute purchases or, going to the register and seeing that chocolate bar or whatever that you might not normally buy, that stuff's not happening with those customers. They're not coming into your store and seeing all these other deals that they would normally see. You're not getting the foot traffic that you would normally get. And on top of that, you're increasing the times that it takes to close your store down at the middle of the night. You're paying your employees more as a result.
Yeah, I mean, yes, those are all true facts, but then you can also get rid of more of the brick and mortar stores and go to a smaller format. There's Starbucks, actually, this is my example I want to give of this, is Starbucks has closed certain stores and opened stores that have no seating whatsoever. They're a show up, pick up your order, and go stores.
Yeah. So I'm not going to badmouth this company because we both have friends that still work there. We don't want to hurt their business. But the fact of the matter is me and you both worked for a company that overreacted to the Amazon effect.
Yeah, and I have no problem bad-mouthing them, but I'm not going to because it's not necessary. I use these other examples because they prove the point effectively. But I still think, Brandon, that a lot of in the major urban areas they're going to that way of, you come in, you pick it up, and you leave.
Yeah,
and that's going to be a real thing. So you're going to see a smaller store format, which should save on real estate. And then you go ahead and you just have that pickup drop off.
Yeah. Speaking of memberships, Costco's earnings coming May 30th. That's what I'm going to look at this week. I just want to talk about that real quick. May 30th, Costco coming up. Want to see what the effect of inflation is on their business. I've mentioned it a bunch of times on this show. If I can get an opportunity to buy Costco at a good value, I'm going to do it.
Great company.
Did you know they sell gold?
Yeah, I did.
Bars.
Yes.
Wow.
I have not bought my gold bars. I buy my gold from the U.S. Mint. I get gold coins or silver coins. I do not do the melted bars, but there are some reputable sites. So if you are interested and you're listening right now, I could send you some links, but U.S. Mint is where I get mine.
So you can see where to buy this. I just wonder, where do you sell them? Where can you go and sell these at value?
I don't. So I'll just talk about me personally, and I've mentioned this many times on the show. I buy these things to buy and hold and pass on to my next in line. I'm not looking to sell them, but if you wanted to sell them, there are many. Again, there's a couple reputable sites that you can use that are legit, and you can sell them on. Now, are you going to get what you think you're going to get out of them? Probably not, because they have to resell them. Or they got to do They got to do a markup on them. So say maybe they don't resell them. You sell through the site. There's one of them, apmex.com. Reputable site, been around a long time. They'll let you sell on the site, but they market the price a little bit to cover their fee. So I mean, you're not going to be able to sell it for what you think you're going to be able to sell it.
All right. Well, regardless of the price of gold and how to sell it, Costco generated $31.67 billion in revenue in the last quarter. 55% of that came from its foods, sun-dries, and fresh foods business. Costco's stock reaches new record levels over the past couple of weeks. Investors are not really, I don't think they're needing to concern themselves overly with the non-food segment, in my opinion. Just because of 55% of the revenue coming from the food. So, staples for Costco are the majority of the revenue. I'm not looking at, television sets and apparel dragging down the revenue of Costco like I would Target.
Yeah, just don't ever raise the price of that hot dog and pizza and you'll be good.
They haven't, which blows my mind. They're
selling at a loss, but they do it because it makes the customers happy.
Yeah, it's a loss leader, but it brings traffic in. So
That's
it. Again, by the way, that's what Costco is. If you're looking at any company that could have said, screw it, we're going to go all online or we're going to overreact to the Amazon effect. Costco is a warehouse. They could have done that, but they chose not to. And they're benefiting from that. They have the foot traffic still that these other companies that overreacted no longer have.
Yeah. I mean, Costco is going to continue to grow, especially as we go into I believe that we're going to head into a recessionary environment, maybe not a recession itself, but a recessionary environment. People are going to have to watch what they spend. I mean, they've already been doing it. We've already seen people in 100,000 plus shopping at Walmart. We've already seen people cutting back on major expenses that they normally wouldn't have before in the past couple of months. You've seen it in the news, seen the headlines. If you want to know what these headlines are, I can send you link after link of it. But it's everywhere. So
Yeah.
We're already seeing it. So I think Costco's a big winner in that because people need to save money.
Yep. So we've seen now Target talk about decreasing prices on items. 5,000 products they're going to lower prices on now. Walmart said they have deflationary effects going on in their discretionary sectors or segments of their store. We'll see if Costco says the same thing, and I'm starting to wonder if we're maybe turning the corner on inflation and maybe going into deflation. I don't know. It depends on how the federal government spending is still affecting the economy. But
well, since you brought up federal government spending, I wasn't going to talk about it, but we can talk about it. The fact that the Fed is more and more likely, I talked about this on a show a couple of weeks ago when we talked about the inflation numbers came in the way they did. It was the first set, not the second set that I covered, because the second set was quote unquote offsetting the first set, which I don't know if I'm sold on that idea yet, but the first set of inflation numbers that came out in the past 30 days showed, and I made the comment that, well, there goes all the rate cuts that you're possibly going to have this year because we're not going to get them just because inflation was coming up too high. The second set came in and everybody was like, oh, see that offset the first set and numbers are, so we might get a rate cut this year. No, Jerome Powell and others have came out this past week on news, on the media, and they said it's unlikely that we're going to get a rate cut this year now. I don't know that I shouldn't say Jerome Powell. I shouldn't say Jerome Powell. I apologize. I retract that. Some of the other Fed members have come out and said it's unlikely we're going to get a Fed rate cut this year.
Yeah.
And so that's big news. And so that has an effect on everything else, on government spending, on companies now, banks that's a big effect on banks. The interest rate's going to remain higher longer.
Yeah, and the CPI, which takes into effect things like health insurance and healthcare spending, which is down 12% year over year, which that's a good thing, don't get me wrong. But that is dragging on that report, which is great. But at the same time, if you're looking at the CPI, you're not necessarily looking at prices that you're paying at the grocery store, which are a lot higher than what that CPI report would tell you.
Right.
I see nothing in any of this data that says that we should cut rates this year. Nothing.
I don't see it either in the data, and I go off data. I don't go off of emotions when I'm trying to figure out what the Fed's going to do because they claim they go off data only. I go off the macro emotions of the day if I'm doing a day trade, but I'm not doing it for an investment or trying to figure out what the Fed's going to do. No, I go off strictly data.
Me either. There's a lot of people saying, too, with the stock market at all-time highs and sitting there at all-time highs, the Federal Reserve should definitely not look to cut rates because they should, I don't think the Federal Reserve should be paying attention to the price of the S&P 500.
I got a problem with that. Here's my biggest problem with what you just said. Ooh, the stock market at all-time highs. You know what? The stock market's always at all-time highs. Look at a chart, the S&P, and if that doesn't go from the bottom left to the top right, then my name's not David Underwood. All right. The stock market's always at all-time highs. Take that statement and throw it out the window because it's garbage.
Yeah, I mean, the Fed doesn't want to wreck the stock market, so they want to be careful with the way they word things. But at the same time, I don't think the day-to-day prices of the S&P 500 should be of no concern to Jerome Powell.
That I agree with. Yes, that's true. That I agree with.
Down or up. Whatever he says, down or up. He shouldn't care if he's going to hit the stock market hard. Now, you don't want to wreck it. You don't want to cause a crash. But you also shouldn't care if market investors are going to react negatively to you saying on television that you're not going to raise interest rates.
You shouldn't care. You got to do what's best for your objectives that you've been given.
Right.
So there you
That's
go.
all I got, by the way. I did Costco and didn't talk about Disney this week.
That's good. We don't have to. We can skip on by.
Okay.
All right. Finally, you mean I get to talk? I get to say something? Here we go.
You know what? We just talked about GameStop and NVIDIA, and I feel like we're just like a broken record.
It is. So let me break it up with some oil news here. All right. So Saudi Arabia is planning a multi-billion-dollar share sale of the energy giant Aramco. If you don't know, energy giant Aramco is actually mostly owned, 90% owned by the country of Saudi Arabia. what they're trying to do is that the company is trying to raise $10 billion. And that $10 billion they want to use, and they want to put it into effect into some of their other private sector, non-oil growth and development in the country there, right? So that's where they want to do with this. The Saudi government is the biggest shareholder and heavily relies on the payouts. So they expect $31 billion in dividends each quarter. Wow. Is that the year? I'm trying to read here. No, that's the quarter. $31 billion in dividends in the quarter, Brandon. Can you believe that?
Wow.
Since its first initial public offer in 2019, they have risen from the IPO price of 32 riyals to a high of 38 riyals. They're currently at 29 riyals a share currently, but they are selling some shares. That's unusual for this company. It's more of it's always seen as Saudi Arabia wants to buy, hold it, grow it, and then use the funds to fund the government and other government projects.
What are they raising money for?
Like I said, according to the article, they're just going to put it into non-oil private sector businesses and growth that they want to.
Yeah, but that's general. They need to have an objective for this if they're going to dilute the value of their shares to the shareholders.
Yeah, well, they have that big project going on in Arabia right now, the wall city thing that they're building. I'm sure it has something to do with that. I'm sure it has something to do with salination projects and plants, desalination projects and plants that they want to continue building there as well. But this goes into a further thing here. Iran. This is another big oil-producing country. They are planning to boost their oil production by 4 billion barrels per day. Now, Iran's under a lot of sanctions. So who are they selling this oil to? Well, they're selling it to China. They're selling it to Russia. They're selling it to countries that are not following the sanction guidance, right? And so that's news on the oil. So Saudi Arabia's still raking in the money, hand over fist on oil. Iran is trying to boost so they could get more money. So that tells me they're also hurting for money a little bit if they want to boost production of oil. Another oil story. So I got all these oil stories, and we're going to bring them all together here in a minute. But Brent crude has had another week of oil price decline. So it's declined 4 straight sessions this past week. Its longest losing streak since January 2nd. West Texas settled down 2.8% for the week. That's really cutting in the prices of the price per barrel, which is good for the consumer, which is why my ExxonMobil purchase I made a few weeks back is not doing well because, the oil producers are hurting because of this. So why is this happening? Well, there's an article I was reading, and it was on livemint.com, and it kind of gave an insight into this. What they were saying, and here's where their stipulation comes in. They said minutes of the U.S. Fed latest policy meeting released on Wednesday showed policymakers question whether interest rates were high enough to tame stubborn inflation. U.S. Fed Chair Jerome Powell and other policymakers have since said that further increases are unlikely, and higher interest rates increase the cost of borrowing, which can slow economic activity and dampen the demand for oil. So because Jerome Powell was quoted in saying maybe dampening demand for oil prices started to drop, and they've been dropping since. This has me wondering some things because the current administration is releasing more strategic reserves in order to fulfill the demand we currently have. We have Iran trying to pump out more because they need the money, and then we have Saudi Arabia, which is kind of chill, sitting back, taking in $31 billion every quarter from their oil into the economy here. There's a lot of moving parts, if you will, here in the oil sector going on. The market's awaiting a June 2nd online meeting of OPEC, right? That June 2nd meeting of OPEC is really going to determine whether or not they keep extending these voluntary oil output, or they go ahead and start releasing some outputs because the price is dropping, and they're not going to make as much money, or maybe they do more cuts to try to make that price go even higher. Who knows? Thoughts, Brandon? I just spat out a lot of information at you. What's your thoughts?
I guess only time will tell. I really don't have any educated thoughts on this just yet, to be honest with you.
Yeah, so in June 2nd, here's what I'm expecting. So if everybody's expecting oil demand to drop, because that's what's the consensus here. Iran expects it. U.S. expects it. I read some British news that they're expecting on the Financial Times.
For the summer.
They're expecting oil demand to drop because of the economies moving into more of a recessionary environment.
Okay.
And that's the reasoning behind it. So if you expect that to happen, right, that's what's causing oil prices to drop. You should think if OPEC wants to continue making money at the price they've been making it, you would think that they're going to do more voluntary cuts and not less voluntary cuts because they want to keep the price higher.
Right.
Which that's going to hurt us. And the current administrations in the United States is going to have to release more of the strategic reserves in order to keep oil costs lower, gas costs for the consumer lower, or gas prices are just going to shoot up.
Right. But yeah, that's not a good thing because it affects everything.
Yeah, exactly. And that's where I'm going with this. And that's going to, in fact, might be the start of the recessionary environment that I keep thinking is going to happen here soon.
I mean, that's what happened in the 70s with the oil embargo.
Yep. That is exactly the catalyst that started that. But that's my thoughts. I'm just providing information, providing data, giving you my insights, giving you my thoughts. And so hopefully, if you're listening right now, you could take that and do some more research and find some plays you can make based off of these possibilities happening. Yeah. Again, the OPEC will probably meet on June 2nd, announce later that evening on June 2nd, or announce on June 3rd what the minutes of the meeting were about and what they came to. So,
right.
Well, around that time, you'll see some volatility in the market for commodities and oil.
Well, I mean, the 1970s, you had a perfect storm of events that are very similar to what we're seeing right now. It's just very interesting to watch. It'll be interesting to see what plays out. 1970s, you had post-World War II government spending on the rise that increased the monetary supply, devalued the dollar. You had the Yom Kippur War, which started the oil embargo and created shortages of oil and increased the prices of gas. Had those gas lines going down the street. We don't have the gas lines right now, thankfully, nor do we have a real true oil shortage going on right now. But we do have a situation where, you might see the increase of the oil, of barrels of oil going into the summer again. And we have massive COVID government spending that we're still trying to get through the system that's increased prices drastically and lowered the value of the dollar. And so it's a very similar situation to the 1970s, not exactly the same, but I guess we'll see where we go from here. I'm still 60% bear, 65% bear. I don't know. I've lost track, Dave, of the numbers that I've been stating on this show. I'm just going off my feelings. I'm 70% bearish here, thinking that we're still probably heading into a recession and things don't really look all that good for the medium term.
Yeah, and there was a meme that went out recently that said that most women would prefer to run into a bear in the wilderness rather than a man. So if you're mostly bear, Brandon, you have a good shot. There you go.
Yeah.
All right. Anyways, moving on here. One last thing I want to cover, and NVIDIA posted earnings, was coming out with earnings this week, right? So you would think that the options on NVIDIA would be kind of up, right? That would be the true case in volume. Well, so some of the other cases here was Dell, right? And that's what I wanted to talk about is Dell also has an effect, the NVIDIA effect on it. Dell was up this week because NVIDIA earnings were well. And Dell has a lot to do with the AI components. They build a lot of these, what do you want to call it, servers and machines that hold the NVIDIA chips. And so they make money off of anything that when NVIDIA does well, Dell's price does well.
I didn't know that, actually. I mean, I knew that Taiwan Semiconductors built the chips for them, but I didn't know that Dell was doing the servers.
Yeah, they were doing the casings, the shell, if you will.
Okay.
So because of this, if you look at an options chart, so I'm going off a chart here, guys. Wow, look at this. I just dissed all chart people, but this is not a stock price chart. What this is the activity, the volume of option activity for Dell over the last few. Looks like I got here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 weeks. The last 10 weeks, and you see a massive spike the week of NVIDIA earnings call coming out. So what you see is lots of people betting on whether or not Dell is going to do well or do bad, and it was about even. So the put option was about went from 1,000 puts to a little over 25,000 puts. The call option went from an average of about 20,000 calls to 90,000 calls just for that 1 week that NVIDIA was posting earnings, not Dell. So it's crazy of the NVIDIA effect. But when you take that into consideration, you could find other companies that have relationships directly or indirectly with other companies that are reporting that week. You can also make a play off of these with options and or stocks. Is this a very risky thing to do? Yes. Is this something I recommend for a new investor with less than 2 years experience, actual experience of investing and trading? No. But is this something for someone, an experienced investor, to take a look at and take a look at the earnings coming up this week and see who has an indirect interest in that company and who might benefit if that company reports well? And that could be a play to make. That could be some way to play it to where you're not moving in on a $20 premium price on a $10 stock that's reporting that week. You're actually going into something that's indirectly related, and you get an actual premium price that's correct. So that's just something I found this week that I thought I wanted to share of another way to make money, if you will, investing in a market that's not directly related to the company that is reporting the earnings that day.
Right. So
cool, Brandon. It's that time of the show, man. What do you got for final thought?
So I just kind of this is may seem off topic, but it's not. Okay. I would say probably about 85% of being successful in the stock market is being disciplined and being calm and being rational. Take your emotions out of it. I recommend even meditating from time to time. If you're new to this, by the way, you're 10 years into it like me and Dave, it's not a big deal anymore. We don't have really a problem with this anymore because we're practiced at it. But at the very beginning, doing things like meditation and finding ways to relax, maybe it's fishing is your thing. Go do it. Take your mind off of it. If you got a stock that you bought and it's down 2 or 3 percentage points, you really shouldn't care. If you bought it and you're not trying to do a day trade on it, and you bought that stock for the long term, and you made a good decision on it, you did your necessary research, that's the other 15% of it. Warren Buffett once said that a monkey could buy into any blue chip stock and over time make money on it. So if you've done your research, that's even better, and you got a good value on it, right? Take your emotions out of it. Practice that. Be rational. And find ways to kind of be in sync with your own self. That's my advice for at least the mindset of an intelligent investor.
There you go. I like that. Yeah. So, yeah, I remember many times, Brandon, back in the day, I would tell people, like, turn off your phone, just don't even look at it, take a day or two, don't even watch anything stock related, and just take a break, especially after a loss. If you took a loss, everyone takes losses. I've taken a loss. Brandon's taken a loss. We've all taken a loss every now and then. No matter how good you are, you've taken a loss at one point or another. So especially after a loss, take a break from it. Just go on a hike for 3 days, kayak, do what you do, go to a baseball game. I don't know. Whatever makes you happy, go do it.
And by the way, do the same thing if you take a big gain so that you're not constantly chasing that dragon.
Right, exactly. Right. I had one gentleman that always asked me every day, hey, so what are you buying into today? Well, hey, what are you buying into today? And the guy never made any money. He was always
you don't have to buy everything. Your days. Some of the really good investors that I know don't buy anything unless there's a recession or a correction of some sort. They wait for those things, and that may happen twice a year, maybe once. That's it.
Yep.
And that's the corrections. The recessions are like once a decade.
Yeah. Correct. But yeah, I mean, as far as this week, I don't have anything. I checked the earnings coming up. I didn't see anything I really wanted to watch this week. Maybe I missed something. I don't know. So for this week, I'm just sitting in what I'm sitting in. I will say the ticker symbol of the other ETF I was buying into for everybody here, not just Brandon, because Brandon forced me to spill it to him afterwards. But it is CONY. CONY was the ETF, the second one I was mentioning last week that I didn't reveal. So I revealed it this week. That's a good one. At its current price, its last dividend was 10%, and that was last month. It does a monthly dividend. Again, it invests in derivatives, so it's risky, but it invests in treasuries, treasury notes, Coinbase, and other crypto companies and with option plays. So they do a spread options, and so that's always risky, but huge, nice payout though.
Yeah, there's an ETF that I recommended. I don't know how long ago it was. Was it like a month ago? For Argentina, ARGT.
Yep, ARGT. I have it written down still on my notes here.
I'm up 13% on it.
Look at that. Yeah. ARG. It's good to call out our winners. I like doing that every now and then. All right, so thank you all for listening. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.